Welcome. It's Lizzie and Susan today. We wanted to help you guys in real estate again with a couple of common questions that we get, and something I'm dealing with this week with one of my favorite clients of my life, which is reverse mortgage.
And you know, that's just a great topic because I think it's so misunderstood, and that from years ago when it first came out it got a bad rap, but I'll tell you, it has some tremendous advantages for the right person or people. It's not just for people who are, oh, I would only do that if I'm desperate. I mean, there are actually some clients who will use it strategically to mitigate some of the expense that their heirs are going to experience when they pass on and they have to cash out, say, a large 401k that they're passing on. Anyway, that's getting a little in the weeds. Basically, what is a reverse mortgage? It's essentially a loan that you don't have to make payments on, okay? Ever. You can, should you so desire, and that really matters for some people too, because you can use it judiciously and turn it on when you need to. But essentially, it's a negatively amortizing loan, meaning the interest that you would be paying, let's say you have $100,000 out on either a line of credit as a reverse mortgage or as a lump sum on a reverse mortgage. Let's say, just for simplicity's sake, the interest was 6%. That would cost you $6,000 that year in interest. That interest would be tacked on to the balance of $100,000. So then your new balance would be $106. It's a very simplistic way to put it, but to give you a sense of really how that works. So you can do two different things with it. You can have that line available and just use it as needed. You don't have to use it just because it's there. Under the FHA model of it, which is the great majority of reverse mortgages are FHA, by the way, too. So it's
I didn't know
insured. That's important too.
Did it start out that way though? Reverse mortgages started out private, and then kind of went
then there was
into...
FHA. Then the privates all went away during the meltdown. Now there are some privates back out, and that can really be helpful for people with, you know, bigger, more expensive homes. Because another example I love, they'd say you happen to buy this property years ago and it's just gone through the roof in terms of value. I mean, I've known people who are sitting on a $3 million house, you know, that they own free and clear or close to free and clear, and they've got children where, sure, it's great to be able to give them something when you pass on, but one client I was told about, which I just think is an incredible story, actually used their reverse mortgage to pay off their children's mortgages.
Wow.
So instead of your kids having to sit there waiting for you to kick the bucket to enjoy, you know, the fruits of your labor, how fantastic is that to be able to give that kind of gift to your children, to be able to enjoy that with them, you know, allow your kid to stay home with their kids while they're growing up, maybe pursue a dream business or job instead of, you know, I just thought that was an incredible gift to give and be able to enjoy in your lifetime. So there are a lot of different ways to use it. And another scenario I ran just recently was for an 80-year-old woman who would like to do away with her mortgage payment. She has a debt of around $400,000 on her house, and her age combined with the value of her house allows her to just eliminate that payment. So she's not pulling cash out on it as an income, but she just did away with, you know, she's in an interest-only loan now, 5.25%. She just did away with like an $850 a month payment.
Wow, that's amazing.
So there are a lot of different ways that you can use it, and really powerful tool. It's not for everybody, but probably for more people than you might imagine.
Do you have to have a down payment with a reverse mortgage?
Well, if you're using it to purchase, it's another thing a lot of people don't realize. You can use a reverse mortgage to purchase property.
Which is something my client's doing this week, and I'd never realized that.
This is why we have these chats.
Yes.
Yes, you definitely have to have a down payment, and generally speaking, it's going to be larger than what your down payment would be on a regular mortgage, because it's based on your age, the property value, and that's how the calculation is run. So just that one example I gave you, The great majority of reverse mortgages are FHA product right now, so they're HUD insured. So you've got, some significant mortgage insurance built in there, but it's still, I think if it makes sense for you, it makes sense for you. And the maximum the maximum property value that FHA uses in this county, San Diego, is $625,500. So for example, let's say you had a property that's worth $800,000. For calculation purposes of what you're going to have to bring in, it's based on the max of $625,500. Okay. So there too, again, it has to do with your age. So in order to calculate really how much down payment you would need, you need the purchase price and you need date of birth.
Okay.
And county, of course. That is the San Diego County.
Okay, and I'm going to ask you more about purchases soon.
Okay.
So, thanks so much, Susan.
Oh, it's my pleasure.
She's so amazing. A great place to get reverse mortgages is going to be with Susan Tully. And how do they contact you?
You can always reach me at 858-336-0758. I'm happy to be a resource to talk things through and see if it's anything that makes sense for you.
And I'm willing to bet money that a lot of people would qualify for a reverse mortgage that have no idea that they would qualify.
It's a much easier qualification process than a regular loan, yeah.
Much easier process than a regular loan, helping senior citizens get into their own properties and take control of their own.
And stay in their home.
And stay in their home for the rest of their life.
Yeah.
And that is priceless.
Yeah, absolutely.
Thanks so much, guys, for tuning in.
Thank you.